Every major system in the United States is reacting at once, from airport security lines stretching beyond control, to financial markets absorbing shock after shock, to military movements quietly reshaping the reality on the ground in the Middle East. What is unfolding is not a single headline, but a chain reaction. Decisions made at the highest level are now colliding with real-world consequences across governance, economics, and global security. Allies are recalculating, markets are correcting, institutions are straining, and at the center of it all stands Donald Trump, confronting a moment where multiple crises are no longer separate, but interconnected, simultaneous, and accelerating. Donald Trump confronts escalating crisis across domestic and global fronts. A convergence of domestic instability and rising international tensions has placed the administration under mounting pressure as multiple policy decisions begin to produce overlapping consequences across governance, economics, and military strategy. The current situation reflects not a single isolated challenge, but a chain reaction in which each decision amplifies the impact of another, creating a complex and rapidly evolving national landscape. At the center of the situation is the widening gap between official statements and observable developments. Assertions of diplomatic progress in the ongoing Iran conflict have been met with conflicting responses from international actors, contributing to uncertainty among allies and adversaries alike. This uncertainty has extended into global markets, where volatility has intensified in response to shifting signals and the absence of verifiable agreements. Military developments have further heightened concern. Reports indicating preparations for limited ground operations suggest a potential shift in strategy that carries significant implications. The presence of U.S. Special Operations Forces in the region, combined with planning for targeted missions, points to an operational posture that could escalate the conflict beyond its current scope. Such a move would mark a critical turning point, particularly given prior assurances that large-scale ground involvement would be avoided. At the same time, diplomatic dynamics are shifting in ways that reflect changing perceptions of American leadership. Key regional powers, including Saudi Arabia, Egypt, and Turkey, have initiated discussions aimed at resolving the conflict independently. Their decision to engage outside of US-led frameworks signals a broader reassessment of Washington's role in shaping outcomes in the region. Domestically, the effects of these developments are being felt across multiple sectors. Rising fuel costs, driven in part by geopolitical uncertainty, are placing additional strain on households already navigating economic challenges. Financial markets, reacting to both external risks and internal policy signals, have shown increased instability, reflecting investor concerns about long-term direction and consistency. Political reactions within the United States are also evolving. Members of Congress from both parties are expressing heightened scrutiny over the administration's approach, particularly regarding the potential for deeper military engagement. Concerns about oversight, authorization, and long-term objectives are becoming more pronounced as new information emerges. Public sentiment appears increasingly divided. While some supporters continue to back a strong national security posture, others are questioning the broader strategy and its implications. This divergence is evident in public forums and political gatherings, where previously unified messaging has given way to more varied and uncertain responses. The intersection of these domestic and international factors underscores the scale of the challenge. Decisions made in one area are no longer contained within traditional boundaries, but are instead producing ripple effects that influence multiple aspects of national life simultaneously. The result is a situation in which governance, economic stability, and global positioning are all being tested at once. DHS shutdown persists. Despite temporary pay relief for TSA workers, the ongoing Department of Homeland Security shutdown continues to disrupt federal operations, even as temporary measures have been introduced to address immediate financial pressures on critical personnel. The decision to authorize payments for Transportation Security Administration workers through executive action has provided short-term relief, but has not resolved the underlying legislative impasse. TSA employees, many of whom had gone weeks without pay, have begun receiving compensation following the directive. However, the return of pay has not fully restored workforce stability. High rates of absenteeism persist across major airports, reflecting both the financial strain experienced during the shutdown and ongoing concerns about job security. Operational challenges remain visible in the nation's air travel system. Security lines at several major hubs continue to extend beyond typical wait times, with staffing shortages contributing to delays and reduced efficiency. Travelers are encountering inconsistent screening operations, highlighting the broader impact of the shutdown on public-facing services. Labor representatives have emphasized that the current approach addresses symptoms rather than causes. While the executive action ensures temporary continuity of pay, it does not replace the need for congressional appropriations, which are required to fund government operations on a sustained basis. Without legislative resolution, the risk of recurring disruptions remains. The shutdown has also had a measurable effect on workforce retention. Reports indicate that a significant number of TSA employees have left their positions during the funding lapse, seeking more stable employment elsewhere. This attrition has compounded existing staffing challenges, making it more difficult to quickly restore normal operations even after payments resume. In Congress, divisions over funding priorities continue to prevent a comprehensive agreement. Negotiations between the House and Senate have stalled, with leadership on both sides maintaining firm positions. The absence of progress has extended the shutdown's duration, increasing its impact on federal workers and the services they provide. The broader implications of the shutdown extend beyond airport security. As a key component of national infrastructure, the Department of Homeland Security plays a central role in border protection, emergency response, and counter-terrorism efforts. Prolonged disruption in any of these areas raises concerns about preparedness and operational readiness. Public response to the situation reflects growing frustration. Travelers facing delays, workers dealing with financial uncertainty, and businesses affected by reduced efficiency are all experiencing the consequences of the ongoing impasse. The temporary pay solution, while alleviating immediate hardship for some, has not addressed the systemic issues that led to the shutdown. The continuation of the funding gap underscores the limitations of executive measures in resolving structural budget conflicts. Without a legislative agreement, the conditions that produced the shutdown remain in place, leaving both workers and the public exposed to continued uncertainty. Nationwide airport disruptions continue amid TSA staffing shortages. Air travel across the United States remains under significant strain, as staffing shortages within the Transportation Security Administration continue to disrupt operations at major airports. Despite recent efforts to stabilize the workforce, absenteeism levels remain elevated, creating bottlenecks at security checkpoints and extending wait times for passengers. Data from several high-traffic airports indicates that a notable percentage of TSA personnel are still unavailable for duty, a lingering effect of the prolonged government funding lapse. The operational impact has been immediate and visible, with travelers reporting lines stretching beyond terminal screening areas and delays affecting flight schedules nationwide. Officials within the Department of Homeland Security have acknowledged the strain but note that restoring full operational capacity requires more than short-term administrative measures. Workforce morale, already weakened by missed pay periods and uncertainty, has not fully recovered, contributing to ongoing attendance challenges. Airlines and airport authorities have attempted to manage the situation through contingency planning, including adjusting boarding schedules and increasing communication with passengers. However, these measures have had limited success in offsetting the scale of disruption caused by reduced screening capacity. The situation has also raised broader concerns about infrastructure resilience, as one of the country's most critical transportation systems continues to operate below optimal staffing levels. The ability to maintain consistent security standards while managing increased passenger volumes remains a central challenge for federal authorities. Britain loga want to load, Brusis want straight time tonight. Bekoltet to may stove, arrangero, Bekosta globe a toast for longer weather pillalet strand, Bekosta costa cois, 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 Bekosta cois bamba ranger want to may stove, Bekosta costa cois, Bekosta cois bamba ranger want to may stove. Bekosta costa cois, 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 Bekosta costa. Wall Street suffers steepest losses since start of Iran conflict. US financial markets experienced their sharpest decline since the onset of the Iran conflict, reflecting growing investor anxiety over geopolitical uncertainty and inconsistent policy signals. Major indices fell significantly, Blancpain trading, marking the most severe single-day drop within an already volatile period for equities. The downturn has been closely tied to developments surrounding the conflict, particularly mixed messaging regarding diplomatic progress and the potential for military escalation. Investors, responding to rapidly changing narratives, have struggled to assess risk accurately, leading to increased volatility across sectors. Energy markets have played a central role in shaping the broader financial response. Rising oil prices, driven by concerns over supply disruptions in key transit routes, have intensified inflationary pressures and weighed on market sentiment. This dynamic has further complicated the outlook for both domestic and global economic stability. Analysts point to a growing credibility gap between official statements and confirmed developments as a key factor influencing market behavior. When expectations of de-escalation are followed by indications of expanded military planning, the resulting uncertainty tends to amplify negative reactions. Institutional investors have begun adjusting their positions to account for prolonged instability, shifting capital towards safer assets and reducing exposure to sectors most sensitive to geopolitical risk. The overall market response highlights the extent to which international conflict and domestic policy communication are now closely intertwined in shaping financial outcomes. Oil prices surge as Strait of Hormuz tensions intensify. Global energy markets are experiencing renewed volatility as tensions rise around the strategic Strait of Hormuz, a critical choke point through which a significant portion of the world's oil supply passes. Recent developments linked to the ongoing conflict with Iran have heightened concerns over potential disruptions, driving oil prices upward and increasing pressure on global economies. Market reactions have been shaped by uncertainty surrounding shipping access and conflicting claims about the movement of oil tankers through the region. While US officials have suggested that limited transit agreements are in place, independent verification remains unclear, contributing to skepticism among traders and analysts. This ambiguity has led to precautionary price increases as markets attempt to anticipate worst-case scenarios. The rise in oil prices is already having downstream effects, particularly in fuel costs for consumers and operational expenses for industries reliant on transportation and logistics. Economists warn that sustained increases could exacerbate inflationary pressures, complicating monetary policy decisions and slowing economic growth. Energy analysts note that even the perception of instability in the Strait of Hormuz is enough to trigger sharp market reactions, given the region's central role in global supply chains. The situation underscores the vulnerability of energy markets to geopolitical developments and the speed at which localized tensions can translate into worldwide economic consequences. The Washington Post reports Pentagon preparing ground operation options. New reporting from the Washington Post indicates that the Pentagon is actively developing plans for potential ground operations in Iran, signaling a possible escalation in the ongoing conflict. According to US officials cited in the report, these options focus on limited, targeted missions rather than a full-scale invasion. The proposed operations are expected to involve a combination of special operations forces and conventional military units, with objectives centered on securing strategic assets. Among the primary concerns is the control of Iran's enriched uranium stockpiles, which military planners assess cannot be reliably neutralized through airstrikes alone, due to risks associated with contamination and dispersal. The report also highlights the recent deployment of US Special Operations personnel to the region, a development that suggests operational groundwork is already being established. While officials maintain that no final decision has been made, the presence of forces in proximity to potential conflict zones indicates a heightened state of readiness. These developments come amid increasing scrutiny from lawmakers and international observers, who are closely monitoring signs of escalation. The prospect of ground operations introduces new variables into the conflict, raising questions about scope, duration, and broader regional implications. Deployment of US Special Forces signals possible military escalation. The deployment of US Special Operations Forces to the Middle East is being viewed by defense analysts as a clear indicator of potential escalation in the conflict involving Iran. Officials report that these units are positioned for rapid response missions, including targeted raids and strategic asset control. While no formal authorization for expanded ground operations has been announced, the movement of forces suggests that contingency plans are advancing beyond preliminary stages, reflecting increased operational readiness within the Pentagon. Regional powers convene in Islamabad, excluding the United States. Senior officials from Saudi Arabia, Egypt and Turkey have held high-level talks in Islamabad aimed at addressing the ongoing regional conflict, notably without participation from the United States. The meeting reflects a shift in diplomatic dynamics, as key regional players explore independent pathways to de-escalation amid concerns over the effectiveness and credibility of current US-led efforts at CPAC. Attendees displayed a more subdued and divided response than in previous years, reflecting growing uncertainty within the conservative base. Concerns over the Iran conflict, rising living costs, and unresolved controversies have contributed to a noticeable shift in tone, with some participants expressing hesitation rather than unified support for current leadership. Questions are intensifying over the credibility of US diplomatic messaging as conflicting statements and unverified claims continue to shape global perceptions. Allies and market analysts are increasingly cautious, pointing to inconsistencies between official announcements and confirmed developments as a factor undermining trust in ongoing negotiations. Strategic communication. What emerges from these developments is not a collection of isolated events, but a unified pattern of pressure building across every major pillar of national and international stability. The prolonged DHS shutdown has exposed the limits of temporary executive action, leaving essential systems like airport security operating under visible strain. At the same time, financial markets are signaling deep uncertainty, reacting not just to conflict, but to inconsistencies in messaging and direction. In the Middle East, the situation is moving beyond strategic ambiguity. Military preparations, including the positioning of special operations forces and planning for targeted ground missions, indicate a shift that could redefine the scope of the conflict with Iran. Diplomatically, the absence of the United States from critical regional discussions, particularly those involving Saudi Arabia, Egypt, and Turkey in Islamabad, signals a shift in global confidence and influence. Domestically, political unity is showing signs of fragmentation. Public sentiment, economic pressure, and strategic uncertainty are converging, creating an environment where reactions are no longer controlled by messaging, but driven by lived reality. Across airports, markets, military bases, and diplomatic corridors, the same underlying theme is emerging. Decisions are producing consequences faster than they can be contained.